Hi, everyone. Welcome back to the channel. This is Ben Morales, your personal financial coach. And as you can see, I have a little bit different of a setup today. I'm actually traveling with my family. I'm on vacation this week, but I wanted to take this time and make this video because I wanted to address a concern that I've been observing as I do research. I've been noticing that some people are calling velocity banking something that it is not. So this video is actually going to highlight what velocity banking is not. So I want you to be careful because I want you to succeed in your finances. And as you look for ways to pay off debt, I know that's in the heart of a lot of people, particularly where debt has gone over the last 2 to 3 years. There's been just an increase in all kinds of credit card debt and as well as in mortgage debt. So I want you to get into the right type of tools so that way you have success. And in order for you to have success, you have to use the tools that position you to pay off debt the most quickly and efficiently as possible. So let's talk about what velocity banking is not. So when you're looking for velocity banking tool, right, there's what I call 4 major tools. There's a credit card that you can use to implement the velocity banking. There are personal lines of credit. And then the last 2 is really important ones because many people have homes right now and those homes have gone up in value significantly. And so now you're thinking about, well, let me use the extra equity that I have in my home. I want to tap into that extra equity, and I want to go ahead and implement the velocity banking strategy. That's a great thought, but do it the right way. So that way you have an effective and efficient tool in your hands. So if that's you, remember, velocity banking, or the debt tool rather, is not a loan. So if you are a homeowner, stay away from home equity installment loans, meaning that as you're doing your research, if the banking institution that you are thinking about implementing these tools with, if they do not offer you a home equity line of credit, find yourself another banking institution, right? You want to be able to do this as a line of credit because lines of credits give you the ability to use your funds over and over again. It's called revolving or an open-ended type of loan or product rather. And that's exactly what you want to use. You want to use an open-ended type of product, and those are only realized when it's a line of credit, not a loan. So stay away from loans. Another thing that velocity banking is not, is really isn't a product that is charging you fees for you to move or transfer money, right? If the purpose of velocity banking strategy is to eliminate paying off loans and to eliminate interest costs or fees, then that's not the right product for you. So if you are being charged by that debt tool that you are using for velocity banking, any type of percentage when it comes to transferring money, when it comes to getting cash out of it, that is not velocity banking. Okay, so now that we've covered what velocity banking is not, let's talk about what it is. So velocity banking, or the tool or strategy, when it's correctly used, it really should meet 3 basic functions. Okay, so in its simplest form, I wanted to do this video and I wanted to keep it really simple, but what it does is it improves your cash flow, right? So as a result of your cash flow improving, if you watch my channel for any particular time, you know, and then I always say that whatever happens on the cash flow side has to impact the expense side. So as your cash flow is being improved because you're using this debt weapon tool, then that means that your expenses are also being reduced, right? Because now you're leveraging what you would have paid as an expense as actual cash flow with the velocity banking tool of your choice. Now, what are the tools of your choice? You have credit cards, you have personal lines of credit, you have HELOCs, right? Home equity lines of credits. If you are a homeowner and if you own a business, you have a business line of credit. Those are your 4 major types of debt tools that you can use to implement this velocity banking strategy. But it doesn't matter which of those you decide to go with. The bottom line is, as you're implementing it, you will see, if you do it the right way, an increase in your cash flow, and you'll see a decrease in your expenses. That is a true velocity banking tool that is being used the correct way. Now, the second thing that a velocity banking tool does, it is efficient, right? It helps you save time, and it gives you instant cash access. It gives you. First started the velocity banking strategy, I had a second position mortgage, or rather home equity line of credit. So I did that for about 6 or 7 months, until I really discovered how much more cash flow was being created if I repositioned my second position home equity line of credit and put it into a first position home equity line of credit. What did that do? If you're a homeowner, you know well that in most cases, you send extra payments, right, in the form of an escrow to the bank every single month. That extra payment could equal $500, $600, $700, $800. So imagine now having to wait throughout the course of the year for those $800 to be used one time a year to meet the obligation of taxes, to meet the obligation of your insurance. Well, if you could change that, which is what I did by changing from a second position HELOC to a first position HELOC, now that created instant cash flow to me, right? It made it more efficient because that extra $700, $800 that I was sending to the bank and having them hold it for me over the course of 12 months, I was now applying it to immediately bringing down the balance of the first position home equity line of credit. And then as those bills, the taxes and the insurance came due throughout the course of the year, then I basically took the money off of the home equity line of credit to then apply it to pay those bills. But in the meantime, I was really just using those extra funds to pay down the principal of the home equity line of credit. So that's what I mean. When you use the tool in a efficient and correct way, it's actually going to save you time. It's actually going to work seamlessly. Now, another thing that I would recommend to you, if you are able to get your debt tool, all right, whether it's a personal line of credit, credit card, or a home equity line of credit, like in my case, if you're able to do it at the same bank, the same institution where you can maintain your checking account, is going to make the process even more efficient because you'll be able to send money back and forth seamlessly, and you'll get this instant cash access. And that's exactly what you need in order for this velocity banking strategy to be effective for you. You want instant access to your cash. You want to be able to move it. You want to be able to utilize it to pay down debt immediately and quickly. Now, the last thing that a proper debt tool, velocity banking strategy, will do is it will save you cost. It will save you cost, interest costs. It will save you fees. So I wanted to write that down. And the reason why I wrote that down is because if you have a tool, you've been doing your research, and now you discovered the velocity banking strategy, and you've made the decision where you want to get yourself a tool and you want to implement the strategy. If you have the tool and that tool is charging you any percentage, it doesn't matter what the percentage is. If it's charging you to move money transfer money from your checking account or from other debt into that particular debt tool, that is not velocity banking. If you're being charged a fee to get cash out, in other words, access to cash with that tool, that is not velocity banking, because again, you're paying extra funds to make that payment or to make the move of money. That is not very efficient. That is not velocity banking, because velocity banking will help you save money over time. So I want to make this video today to address that. Again, continue to put any concerns or comments down. Continue to reach out with any questions you might have. I promise that as I get to them, I'll answer them just as quickly as possible. But do your homework. Be careful. If you need help with this strategy, you want to get it on a free consultation call, by all means, my information is below. And I'd love to just see exactly what it is that you're looking to do and what you have learned searching in the market, and help give you some guidance into the right way to do this. So until the next video, look forward to being back home soon. And until that video, take care and God bless.